Okay, the lesson or the session is being recorded, Ben. So we are on the first transaction. We said that we are going to calculate our cost of sales. So we found that our cost of sales amounts to how much? It amounts to 6,200, right?
Yes.
Our cost of sales amounts to 6,200.
200.
And then you also have a sales amount. We sold our goods on credit, and then this transaction was not recorded. So obviously it will affect both your sales and also cost of sales. It will affect your sales with the sales amount of 9,920. And also it will affect your cost of sales with an amount of 6,200. So my question is that when we go to our sales and also cost of sales, these amounts, are we going to minus them or are we going to add them? That's the only question that I have. Do you think that you will add them or will minus them? And then remember, we only minus when it's allowance, meaning only when it's returns. How are we going to minus it?
Yeah.
You can just maybe take a guess on what do you think about that. Do you think that will add it or minus it?
Add.
Will add it. That's correct. What is our sales? Basically, in our sales, we record the value of the products that we sold. Doesn't matter whether we sold them or sold them on cash or on credit. As long that you sold our products, you will record them in your sales. So you'll add them in your sales. So in this current situation, we sold our products, but then we had omitted to record them. Hence, in our sales, we will have to add them. So in your sales, you'll add 9,920. Let's go record it. What is our sales? We'll say plus 9,920. Also brackets. In our cost of sales, you will add what? How much is it? Was it 6,200?
Yes.
And then let's add them. So let's add our sales there. 3,345. So how much do we get when we add our sales there? 3,345.
3,354,920.
Let me write it. You said 3,354,920.
920.
And then we go to our cost of sales. We'll say 2,090,625 plus 6,200. And then we get our cost of sales as 2,096,000.
825.
And then at this stage, I think we can calculate our gross profit. We'll say sales minus cost of sales. In which our gross profit will be 1,258,095.
Yes.
Let's go natural balance. Natural balance, I just want us to copy and paste the information in which they give us. We have written taxes. Written taxes is an expense, ne? Yeah, written taxes is an expense. So under expenses, should have an expense called written taxes.
Okay.
Let us minus this one that you wrote here. Written taxes. And then it was 72,000. 22,500. 2,500. Let us also minus this income. And then we also have what? Bad debts. Bad debt is 9,450. Let's write it.
Yebo.
Bad debts 9,150. In bad debts, we know that we always add, right?
Yes.
9,450. You also have insurance. Okay, let me check this thing. Apologies. Oh, it's November 2023 paper. Yeah, right, bad debts. We know that in bad debts, you always add. There'll never be a situation where you have to minus. And then we also have
Yes.
insurance. Our insurance is 26,500. 6,500. Let's check the other ones. We have interest on loan. Interest on loan is interest expense, ne?
Yes.
You know that our interest expense, we have to record it here. And then it's a question mark. And then also we have rent income. Rent income is 126,224. Then salaries and wages and our expenses, 175,000. Salaries, 175,000. Consumable, and also we have consumable stores, which is 62,540. Remember for our consumable stores, it's 62,540. We'll minus consumable stores on hand here. We'll minus the one that is on hand in our transaction so that we get the one that was used. For consumable store, stationery, and also packing material, we always minus the one that is on hand so that we get the one that was used for the current financial year. Be vigilant about it. We also have interest on loan, interest income. Our interest income is 2,200. Interest income, 2,200. And also we have sundry expenses, 124,500. And then lastly, equipment hired from member. So we hired an equipment from Zaira. And then obviously when we hired something, we'll have to what? You'll have to pay a monthly premium, maybe a monthly rent amount. So you used to
Yes.
pay 5,200. Equipment hired. A yearly premium, apologies. It's an expense, right?
Yes.
5,200. It's an expense. It's not an asset. Asset are the things in which you have control over. So if ever you hide something, it's not necessarily your asset. It's a lease. So you have to pay that monthly premium of, in fact, a yearly premium of 5,200. And then I think that's where they end. Let's go to adjustment here. The first adjustment talks about what? Our rent. Remember that when dealing with everything, your financial layer plays a critical role, especially when it comes to your financial statement. Your financial layer ended on the 31st of December 2021. Ended on the 31st of December 2021, meaning it commenced on the 1st of January 2021. So let's check it. Transaction number 2, rent. Rent was received up to January 2022. The rent was increased by 12% on the 1st of August 2021. So for this one of rent, you will have to draw up your financial layer. So let's draw up our financial layer. Let's draw up our financial layer. You can never do rent without your financial layer. So we'll draw up our financial layer. Okay, in our financial layer, we know that our financial layer ends in December. 31 December, meaning it began on the 1st of January. And then I'll highlight it here on the 1st of January. Right? For my transaction, what does it say? It states that you received your rent up until January 2022. Our financial year ends in 31 December 2021. But then the transaction says that you receive your rent up until January. Meaning you received up until January. Meaning you received your rent for 13 months. You're supposed to receive rent for January. You're not supposed to receive rent for January. In that instance, you'll call it income received in advance. You're not supposed to receive rent for that 13th month. So what are we going to do there? You'll have to calculate the rent for January, and also in your financial statement or income statement, you will have to minus it. That's what you know. We received our rent for 13 months. So, and also the transaction says that know that rent was increased by 12% on the 1st of August, somewhere during our year, which is the 1st of August. You will highlight it in your financial year on the 1st of August, 1 August. 1 August, your rent increased by how? By 12% plus 12%. Your rent on the 1st of August increased by 12%. Subsequently, when the increase or decrease occurs, it simply means that the rent that you are going to receive for the current financial year, it was not constant and also it was not same. Immediately when it's not the same, you'll have to calculate the rent before increase and also calculate the rent after increase. An increase occurred on the 1st of August, meaning you're going to receive an increase for August, September, October, November, December, and also January, which is how many months? From August up until January, it's how many months? Let's calculate it. August, September, October, November, December, January, 6 months. Meaning you pay that increase of 12% for how many months? For 6 months. So what are you going to do? You're going to calculate your months before increase and after increase. So after increase, we just found that Gucci, it was how many months? It was 6 months. And then you calculate the months that you paid before an increase. Before an increase is going to be from the 1st of January up until July, which is how many months? It's 7 months.
7 months.
7 months. So what are you going to say? Okay. Before increase, what was paid? Before increase, I was paying 100%. Before increase, I was paying 100%. Now, see, 100% multiplied by 7 months. For 7 months, I was paying 100%. And then when you say 100 multiplied by 7, you will get 700. And then an increase occurred. When an increase occurred, you're no longer paying 100%, but then rather you're paying 100% plus that 12% increase. 100% plus that 12% increase. Meaning after an increase, we're paying more like 112%.
Okay.
112%. And therefore, it's 112% multiplied by the months in which you paid it for. You paid 112% for 6 months. Therefore, we'll say 112 multiplied by 6, in which you get 672.
Yes.
Then we'll add your amounts. We'll say 700 plus 672. And then we get 1,372.
372.
So that amount of rent that you see there in your trial balance, you'll have to calculate it. You'll see that amount, multiply, use that formula of amount multiply by what I want over what I have. What am I looking for? What are we looking for? We're looking for the rent for January, right?
Yes.
Looking for the rent for January. In January, what was the percentage that was paid? It was 112. After
Yeah.
January, it was after increase, right? What was the percentage that was
Yeah.
paid? It's 112. You use that formula, amount multiplied by what I want over what I have. I
Over
want my
what I have.
divided by what? 1,372. So let's check that amount in a trial balance. How much was that amount in a trial balance for rent? I think it was 126,224, right?
Yes.
Therefore, we'll say 126,224. 126,224 multiplied by 1,112 divided by 1,372. And then we'll get the rent for January. 126,224 multiplied by 1,112 divided by 1,372. In which you'll get your rent for January, which is 10,304. So it simply means that your rent for January will be 10,304.
Yes. Ngitholile.
Uyitholile?
Yeah.
Was it clear? Do you have any
Yes.
questions? Okay. Therefore, we'll minus 10,304 in our rent. Where is rent? We'll say minus 10,304. And then we'll close our bracket. So let's calculate it. 126,224 minus 10,304. And then we'll get our rent, which amounts to 115,920. And then we go to our next adjustment. Our next adjustment says that consumable stores used, that's the keyword there. Consumable stores used during the year amounts to 54,316. They gave you the consumable stores that was used. It amounts to what? 54,316. You know that consumable store that is used? You only write it here. 54,368. You can even calculate the one that was on hand. Anne? You can even calculate the one that was on hand, that they minus here. It will be just the difference between the two amounts. On hand, you can simply look for the difference between the two amounts. Meaning 62,540 minus 54,368. And then we'll get the one that is on hand. That will minus there, which amounts to 8,172. Which is 8,172. The 8,172 is the one that is on hand. That's how you should calculate it. And then they said that there was no trading stock deficit or a surplus. There was no trading stock deficit or a surplus, meaning we used our trading stock. There's no trading stock deficit or a surplus simply means that there was no fraud in our business. It's a good thing. Simply means that we calculated our thing correct. Meaning there were no people who had IHAB. You call it IHAB and it. So that is a good thing. If you don't have trading stock deficit or a surplus, that is a good thing. Bad debts written off birthdays of 8,360 must be written off. We already know that in birthdays you always add. Soft light. Birthdays of 8,360. Already in your birthdays, you have already said plus. Or when you
Yeah.
wrote when you copied your information that I shared in your trial plans, you already wrote plus. So you just say plus 8,360. Soft light. And then you'll add both of them. So we'll say 9,450 plus 8,360. In which you'll get 17,810. Is that correct?
Yes. Yeah, boo.
And then